Few issues have dominated headlines like the recent Gillard government decision to introduce a carbon tax. The tax has emerged from the climate change debate, with even supporters admitting it cannot guarantee any reduction in carbon emissions. Danish environmentalist Bjorn Lomborg agrees, suggesting that although the global warming debate has matured, there's possibly a better way to handle the problem than taxing carbon.
Well, in a sense, I think the global warming conversation has gotten a lot more realistic, because it's been framed in this it's the end of the world, or people saying it's not happening at all. I think a lot more people are starting to realize it is a problem, it's something we need to fix, but it's not the end of the world, so let's skip the histrionics, the scare tactics, and start talking about what really works. And I think also if you look at the last convention in my home country in Copenhagen, where we had a spectacular failure of getting any a global approach to dealing with climate change, indicates that we need a different way than the current one that we've been trying for 20 years now.
Well, here in Australia, the government has just announced a carbon trading scheme prior to the introduction of an emissions trading scheme. At least that sounds like a plan. In your view, is it a good plan?
Well, fundamentally, taxing carbon or making a trading scheme is something that will have a significant cost, and unfortunately, it'll do very little to actually tackle the problem of global warming. Not only because even if you put a reasonable carbon tax, most Australians will still be emitting most of their fossil fuels, but of course also it has no play in either China, India, or the US. So while this is a worthwhile sort of starting point, it's really talking about the wrong thing. If we want to fix global warming, what we need to realize is that's about making green energy a lot cheaper. That only will happen if we focus on innovation. Let's spend money on research and development into green energy technologies, because if we could get green energy to be cheaper than fossil fuels in, say, 2 to 4 decades, we would have solved global warming. Everyone would switch over, also the Chinese and the Indian. So in a sense, we're putting the cart in front of the horse when we're talking about putting a low carbon tax, which at best will only work to raise the revenue to spend on research and development.
Now, one of the issues in the debate is that we're introducing this scheme, carbon trading, before any such scheme is introduced in the other big emitters of the world, China, India, and the United States.
And listen, that's absolutely right. If you're trying to do something about climate change, you're not going to succeed by just doing it with Australia or even a few other nations. Remember, the European Union, a much bigger place, we promised to cut carbon emissions 20% below 1990 levels by 2020. If we actually manage to do that, the average annual cost is about $250 billion. Having done that through the whole century, spent $20 trillion, we will have reduced temperatures by 0.05 degrees. 1/20th of a degree centigrade for $20 trillion. That's a very bad deal. And that's why we need to find a smarter way forward. But if you invest in green energy research and development, actually Australia could do this all alone. It wouldn't go as fast, but it would still push us towards having cheaper renewables sooner. So this has the added benefit that we can actually do it unilaterally.
So that sounds good, but where do we get the money?
I work with something called the Copenhagen Consensus on Climate, where we bring together some of the world's top climate economists and 3 Nobel laureates to look at what are the smartest ways to tackle global warming. They propose we should be spending 0.2% of GDP on research and development into green energy, because that's the most effective long-term strategy. That'd be about $1.6 billion per year for Australia. Not a whole lot of money. Now, it's not nothing, but it certainly is something that you could easily do. You could do this through a very low carbon tax, and that could raise the revenue to fund this. But you could also, of course, get it from many other places, essentially general government revenue. So I think let's not talk so much about the incredibly divisive and ultimately very ineffective carbon tax or carbon trading system. Let's start talking about the cheaper, much more effective way that will actually tackle global warming, namely investment in research and development of green energy.
Now, would you include nuclear energy in this equation?
Absolutely, nuclear fission is a potential way to cut carbon emissions dramatically. The problem that I have with nuclear power is not what most people have. They worry about where we're going to store the material. We actually have that pretty well down. The much bigger concern is we've been promised that it would be very cheap, but ultimately, pretty much everywhere, it's been pretty expensive. It's on the order of 2 to 3 times the cost of fossil fuels.
Can I move on to farmers and agriculture? And I put it to you that farmers around the world and in Australia are very confused, A, about climate change, and B, about carbon trading.
Obviously, farmers need to recognize that if we have carbon trading or carbon taxes in some way, and especially if we have greenhouse gas taxes, those could be pretty significant for them, because not only would they have to pay for their fertilizer and for their transport, their fossil fuel use and their tractors and everything else, but they would probably also have to pay for the way they utilize their land if it emits more or less methane. Those are big numbers potentially. And so you have to be very careful. Now, this doesn't mean you shouldn't take responsibility. If you emit a lot of CO2, essentially you should take responsibility. But the real point, of course, is to say farmers should be the first ones to say, do you want us to be taxed heavily, cut back our emissions a little bit, and do nothing for climate in 100 years? Or would you then say we should extra much focus on investing in clean energy research and development, because that's what's going to power the rest of the 21st century, not just for the Chinese and the Indians, but also to have the technologies of low methane emissions from cows and livestock and from agriculture in general. Those are the kinds of things that agriculture should be pushing. Get better technologies, because that'll be cheaper for farmers and better for the environment.
So what you're saying, the way you put it, there could be some positive news in this for farmers?
I think it's crucial that agriculture and many others come out on a positive side. There's a natural tendency to say, oh, no, we don't want any taxes, and please, just stay away with all that. That's not going to solve the problem. Global warming is not going to go away because we don't want to talk about it. But what farmers could be instrumental in making is to say, we want to make sure we don't just do things that make us feel good, make a carbon tax to say we care about the problem, but do things that will actually do good for the environment in the long run. And that's about investing dramatically more in research and development. It's an incredibly much cheaper policy than the current one that's being proposed, a much more effective one, and ultimately one that'll bring agriculture out in front of this issue.
So in summary, Bjorn Lomborg, the key is research and development into low-cost forms of alternative energy.
The key is to realize you're never going to succeed to make fossil fuels so expensive nobody wants it. What you do need to do is to make green energy so cheap everyone will want it. That's about innovation and research and development into green energy.
Bjorn Lomborg, thank you very much.
Thank you.
And of course, one doesn't have to be a rocket surgeon to realise we haven't heard the last of the carbon tax issue and how it impacts on agriculture. Moving on now, and of immediate consequence for farmers and graziers are prices, and last week overall it was very positive. First up, livestock, and lot feeders and supermarkets have put more heat into prices, pushing the Eastern Young Cattle Indicator above $4.10 for only the third time in its history. Export categories were in demand. Yearling feeder steers were especially popular. That trade cattle price is now more realistic after a live exporter filled a big order, but essentially this is a supply-driven spike. And in summary, young cattle prices are up 17% on this time last year. The record lamb price has flushed out bigger numbers. Throughput is up about 8% on last year, and although the indicator dipped, it's well above the 2010 mark. Pig numbers have tightened somewhat, helping keep this market firm, and the price is being helped by the rising cost of competitive red meat at the retail level. Now, the live cattle trade has some problems. There's a blue tongue question over some cattle headed for Turkey. I understand AQUIS is in Turkey at present trying to resolve the issue. Turkey is seen as a much-needed emerging market in the live trade, even if it is for live cattle below the blue tongue line. Prices out of Darwin are firm to strong. The wet is causing some transport difficulties. Steers at $2.15 and heifers about 20 cents less. Now to grains, where the bears made a full frontal assault after recent bull runs, which of course confirms the old adage that higher prices will soon fix higher prices. Soybeans, wheat and corn all fell over the course of the week. There's been some revision upwards of old crop stocks, and slow American exports are also impacting on prices. In New York, cotton and sugar remains strong. Cotton refuses to drop below the $2 mark, and sugar continues to sit close to 30 cents. Not a huge amount of action in local futures trading. Prices are nominally weaker simply because of the action in Chicago. Wheat exports could be booming, but shipping is very slow in the east because of the lack of rolling stock and flood damage to rail lines. East Coast milling wheat for early next year slips $7, while WA wheat for the same month is down to $309 a tonne. And despite local problems with super discounted home brand milk, the dairy export trade is very strong. Skim milk powder and butter prices are both trending north. Shortages in Europe and America look set to continue. And finally to wool, where prices have again gone whooshka. And this was despite growers emerging with substantial on-farm and in-storage wool. The hope obviously was for higher prices, and they got their wish and more. The market is up nearly 53% since the start of the season. I've now heard the term the wool bubble, and we all know what happens to bubble.